I'd like to introduce our next speaker. In fact, he's one of the main reasons that White Bull is now in Barcelona. He's not Spanish. He's actually from Hamburg and has a grand vision for really turning Barcelona into an entrepreneur's paradise. But that's not really what we're here to talk about, but he's just one more example of the wave that's starting to build here, because we all like the weather, I guess. It's a great place to live. We've got some folks from Madrid who aren't from there. Anyway, without further ado, Christopher Pommerening, he's one of our advisors. He's one of the founders of Active Venture Partners. He raised a fund last year. He's going to talk about a variety of things and wake everyone up after lunch. So, Christopher.
Perfect. Thank you, Farley.
Good to see you.
So, first of all, guys, can you just all stand up for one moment? Please. It's after lunch, okay? Exactly. Do some stretching. All right. There we go. And while we're standing, where's Elizabeth? Elizabeth? Can you come out of your box? All right. I think it's the perfect time to say a big thank you to these two guys who worked their asses off. Okay, so thank you for organizing again another White Bull, and actually thank you again for giving me the speaking slot after lunch. We'll talk about this. Okay, there is a clicker, they said, somewhere. Where do I click? Is that it? I don't know. Looks like it. All right, perfect. So actually, Farley asked me, to speak again at White Bull, and he said, like, yeah, why don't you do something inspirational like last year again? And he said, well, you're so passionate about Barcelona and so on. Why don't you talk about the ecosystem around Barcelona? Why it is becoming the next startup capital of Europe, and then I said, well, that's an interesting topic. I'm very passionate about it, but right now I think there's one topic which which is coming up very strongly, and which is also a little bit developing over what I was speaking last time about, and that's really what's happening to venture capital and what's next. So I would really like to talk about this today. And just to give a brief introduction, anybody, it's a bit dark, anybody knows this place? Can anybody see it, where this is? No? Venice? Oh, yeah. Actually, this is a place which has more bridges than Venice. Hamburg, who said that? All right, there, perfect, Hamburg. All right, what's wrong at this picture? It's not raining, exactly, perfect. So it took me a long time in Google actually to find this picture, because normally you have like lots of clouds on top of it. Actually, anybody else from Hamburg here? All right, good. So I can talk freely. I'm actually from Hamburg. So why I actually changed my space from Hamburg to Barcelona is very easy. So normally you have about 3,000 rain hours in this place, and Farley is again in the back, I think. So this is our new home. Oh no, in the back. So this is Sitges, okay? And Sitges has about 3,000 sun hours, and well, it's right next to Barcelona, one of, I think, the most beautiful places to live right now. And that's one of the big arguments why I think people in the future will choose this place for living, and especially in the startup world. All right, just a little bit of a background. So I talked about I'm passionate about a lot of things. Barcelona. Next thing we'll talk about what happens to venture capital. So a little bit of my background. I love cars. I founded Autoscout24 here in Spain, and together with my partners we grew it around Europe into 10 countries until it was sold in 2002 to T Online from Deutsche Telekom. But I also love boats. So I created a company called boats24.com in 2000, and that one happily drowned in 2002. I think it's always a good example to talk about things that don't work out, and this is my great example of failure. Well, let's talk one moment about active venture partners. Actually, today is a big pleasure because Ricard, where are you? There in the back, and Blair right there. Two of my partners are here. So we built up since, I would say, 2002, having our first fund in 2004, a venture capital company out of Spain with an international vision. And I mean, that really in 2002, 2004 was really a challenge, not only because we were, fighting against the bubble, but also convincing, I would say, mainly Spanish family offices to invest in venture capital was a really, let's say, interesting ride. Okay, so actually today we are an international VC. We're investing in the early stage and expansion stage, and we do tickets between 500,000 to 5 million euros. And well, let's say wider tech space is our game field. But then people ask us, so what makes you so unique? Because our fund are still, let's say, humble. We are managing about 75 million euros. So they say, well, what makes you really unique? And I just take a quote. Is Ben? Ben, no, yeah, you are also Ben, that's right. I mean the Ben from the Wall Street Journal. He's probably talking out there. Anyway, sorry, right in front of me. All right, there you are. So Ben actually visited me yesterday, and I'll just quote him. And he says, the coolest VC office ever. So, okay, so our USP is actually our office, okay? So when you want us to invest in you, you just have to come to our office, and maybe you fall in love with our office. Anyway, I think a little bit further than that, we are entrepreneurs at heart ourselves. I think that is a little bit special about what we do, we really think that entrepreneurs are the changers of this world. So. I mean, Steve Jobs said already, people who are crazy enough to think they can change the world are the ones who do, and that's really the people that that we like to find. Actually, here's a little selection of them. I think, yeah. Now Ben, now you can actually raise your voice. So you see Ben with his co-founder Javier of Packlink there. People like Gustavo and Gerald from Buy VIP, which we sold in 2010 to Amazon. Golden Gecko, I think that became public, I think a week ago. We sold to DMI in the US, and a lot of other great people that we like to foster. So this is a little bit what we do. But, last year here at White Bull, I had this privilege to talk about how to fundraise out of the perspective of a venture capital company. It was really not a joyride. And the guys, how many of you were there last year? Okay, so I'm just giving you a very 30 seconds kind of these snapshots what they do in the US, right? I mean, I don't know, 24, what are these series called, or Homeland, right? And so what happened in last episode? So last episode, I basically spoke about our fundraising effort between 2010 and 2012 to raise a fund based out of Barcelona against all odds, okay? And basically, well, long story short, a lot of tears, a lot of blood, but in the end we made it. But the overall KPIs were 24 months from first to final closing, 105 LP direct contacts, 95 no's and 10 yeses, okay? So, well, so much for, let's say, doing an effort against, let's say, all the turbulences in global crisis and economy. But it made me think a little bit. Together with my partners, we said, okay, is this just I mean, 2009 to 2012? Is this just the years, or is there something else happening? Is there something wrong? And I was really, let's say, touched deeply because listening to 95 no's in 2 years, kind of it gets to you, and that's when I started to analyze and read a little bit deeper over the last, I would say, 18 months, maybe already 2 years, to what's really happening out there in the market and what's really happening to our sector, the venture capital sector. All right. So there's a nice post. So the Huffington Post in 2009 says, "The death of venture capital as we know it." Okay, fantastic. That's a good one to start with. I think the next one, Harvard Business Review, 2010. "The VC shakeout. Venture capital hasn't worked for a decade and must be radically restructured if it's going to influence innovation and make solid returns to investors." And basically, I think here we have 3 very clear slides. One is talking about the few deals that are closed, no exits, and long waits until the real exits. So I think these are the substantial problems that we all probably know already that our industry is facing. Well, I went on, and then suddenly the Fortune magazine 2011 says most venture capital funds lose money. Okay, and then actually beautifully 2012 European Venture Capital Association gives proof for this and basically says, well, actually if you look at the last 4 or 5 years, I mean the whole industry has basically returned less than zero. Okay, not so happy news. I know I have a good friend here. Where's Theodore? Theodore? Oh, there you are. So, we spoke last year after my speech, and he said, "Oh, great, I really like your inspiration, and that's why I started my startup just now. And now I'm giving you all this crap, and it's not really inspirational, right? So, okay, let's try to change this. Venture capital, okay? Okay, Tyler Durden, 2012, okay? I like this especially. And, and then somebody in 2013 has this great idea about disrupting venture capital. So actually, after now giving all this shit on our sector, somebody came up with an idea to say, actually, maybe it's time to change something in our sector. And this is really what I think is interesting, because I know, when was it Greylock, one of the first venture capital companies, I think, around? I don't know. Anybody can help me from the guy? Yeah, you have you're 100-year experience, right? So, yeah. I mean, besides you, obviously. Okay, so what is that, like 65? When was that, 65? 70s? Okay, so 70s. So that means 45 years? Yeah. Okay, so we're talking about an industry that's 45 years old, and it's the industry that fosters innovation, right? Because in the end, our industry, the venture capitalists, are the ones that are backing the most innovative ideas of tomorrow. But the funny thing is that it's an industry that barely has innovated, in the last 45 years. So I think actually this could be right now the moment that we should face this innovation and disruption. Okay, so maybe it's time to change. That's my message, and that's what I would like to discuss with you. And I've been looking a little bit into the last 3-4 months. I've been looking into the different models that have been popping up over the last, I would say, 3 to 5 years, and just want to give you some insights where I think that interesting stuff is happening. And probably one of the good starting points is the Lumascape for at least digital capital, which explains a general overview of the capital landscape as we know it. So obviously venture capital as its center point. Around venture capital we have growth equity, we have the private equity guys, and obviously hedge funds, which do not actually play such a big role overall, but let's have them there. Then venture debt. I think just now I talked over lunch with Creos. Where's Creos Partners? Creos over there in the back. Exactly. So great alternative right now. And then they even identified super angel incubators and crowdfunding. Okay, so there we're already touching some of the more newer models. All right, let's go into some of the new models that I think are interesting. Well, it seems like everybody's talking about accelerators in this moment. I don't know, there's not a week where not a new accelerator is popping up. I just put out here some of the, let's say, most, let's say, renowned or actually tech star from a good friend, Brad Feld. I think he, together with David Cohen, they created Techstars in 2007 already. By now, I think it's the largest accelerator. They have about 180 or 190 company startups in already, I don't know how many countries. Y Combinator obviously is very well known, the 500 startup model, and then actually Startup Bootcamp out of Copenhagen. These are all appealing models which basically give a very, let's say, very close support, especially on education and mentorship between 3 to 9 months towards the entrepreneurs. So they have an added value right there. Then something which has popped up, and I think quite honestly, there are our friends from Telefonica have done a good deal with Wyra. They really have put in corporate acceleration on the map. I think they started about 3-4 years ago. I think Tom earlier on talked about their new initiative with Pearson Catalyst. Obviously, Deutsche Telekom saw Telefonica and created Hubraum. And actually, imagine what Volkswagen has actually gotten into a venture collaboration with Plug and Play out of Silicon Valley, and now there is a Volkswagen. It's called actually ERL, Technology Accelerator, for technologies aimed towards the automotive industry. And the latest thing, which I just got, I think 10 days ago, was a questionnaire of Bosch. I don't know if you know Bosch, the tools company like drillers and whatever. So they are studying to create an accelerator for whatever, drillers, I guess. So anyway, so this is another say nice little happening. And then from accelerators, I would like to look into modern VCs. And I think I took just a selection of, I think we looked into 15, 20 or more. And the 3 ones that I think are interesting to just pull out because of their slogans is True Ventures, for example. Every business has a customer. Our customers are entrepreneurs. So, I don't know, any LPs here that invest in venture capital? You invest in True. Okay, so you are LP and okay, perfect. So I think this is very, very interesting because actually about 2 months ago, I was at the IESE University, one of this, very interesting and famous business schools, and I was sitting together with the university professor of IESE, specialized in venture capital and private equity, and the guy from London Business School. And we were together at the table talking about the future of venture capital. And they still wanted to tell me that the customer, the real customer of venture capital is the LP. But, I think today, these guys really nailed it. It's the entrepreneur. And I think it's a very important aspect to understand future returns that, we have to understand this part. Secondly, I think first round capital. Actually, first round capital is not only, let's say, my choice, it's actually the world's choice because it's the world's most visited VC website. Okay? So I think something they have done right. So their slogan directly is we're turning venture capital on its head. And I think what's special about them is that they have understood not only that they start very, very early, basically first round, which is their slogan, they invest in the first round, but they create kind of technology and like a support structure around their entrepreneurial teams, okay? And then Andreessen Horowitz, I think as a last example there, I think one statement which I love is founders make the best CEOs, don't replace them. And that's really what they create. They create kind of a structure that makes sure that if CEOs are not up to speed, or or the entrepreneurs, let's say, need to get to the next level, but where normal, maybe other VCs would say, okay, now replace them. They try to create a support structure around them in order to give them the next level. And they have actually, I think by now, 45 employed operational personnel that help startups in their operational topics. And I think that's a very interesting added value service to entrepreneurs. And then I think one of the last models is venture builders. I think most of you or all of you guys have heard of Rocket Internet. I mean, we could talk also about Forward Ventures out of the UK. There's Project A out of Hamburg and so on. So basically, building new ventures from scratch, and basically basing the building on a very scientific analysis of what are the next models of the future, and then create a full structure around it. Okay, so we can argue about the ethics of the Samba brothers. I'm the first one. I always look at values. I mean, personal values of people. So I think there's definitely a topic to discuss with these guys. But one thing is for sure, I think they have raised just last year 1.2 billion euros for their ventures, and I think that's quite an achievement. And then last thing is crowdfunding. Well, Kickstarter, you all know, is around for some time. I think the one that I would like to focus on, you have probably read the news, is AngelList. The last 2 weeks have been quite a flood of news around them, especially about their new approach of syndications. Syndications, basically, in their world, is that anybody in the world can basically find a deal and propose to the community to join his syndication and to co-invest in a company. So actually, the first syndications, I think within just under an hour, they raised 250,000 euros for some startups in Silicon Valley. I think it's a great way of basically putting the crowd to work, putting technology to work. The only thing is, I mean, to be honest, I mean, this is a pledge fund. So it's basically putting a structure to a pledge fund. So the question is how disruptive this really will go, especially if we think we are looking for added value smart money. And what's happening here right now is you can access a lot of money in very short time from a lot of people that you actually don't know. Okay, so but what I wanted to say was, especially these two examples, is crowdfunding is there and it's very important, and a lot of people are accessing it. It means for us that actually the part of the money, which is in part of venture capital, becomes a commodity. So we have to think of, so if we are normally having funds under management, the funds are really the commodity in the future. All right, so I just made, whoever just came in a minute ago from lunch, I just thought I'd make a 5-point summary of what I just talked about. So I think out of the acceleration model, we see mentorship and education is probably the one specific point that is really key and that could be something very special in the future. I think the modern VCs have understood the added value service approach. So it's not anymore, I am the guy with a suit and a tie, and I call myself VC, and you are the entrepreneur. But no, first of all, we are partners, and more than that, I'm going to provide services to you, and I think that's in that model. Then scientific venture building, as being the venture building model is going to be there, very up in the list. And then money becomes the commodity in the future. So if we want to expect, I think, management fees from LPs and so on, we have to think of something more than just providing capital. And to finish up, because you became all silent, I want to just give you some very important KPI, which I take along to any place I go and anywhere I speak. And this is this number, 700,000. Anybody that has an idea what this is? And who wasn't with me before? Okay, nobody? No idea? No? Okay, so yeah? Finance teams. All right, that would be fantastic. So I did 700,000 deals in my, no. It's also not my salary. This is actually my life KPI. What does it mean? It's actually the hours that I will live on average in this world. Okay, 700,000 hours. That is, now if you start to calculate how many years this is, I can tell you it's about 80 years. Okay, and where is this based on? Basically on a life expectancy graph. And I mean, basically, so the ones from you, we are all from Europe, let's say, that's somewhere around here. So if you are a male, you have about 80 years. If you're a female, you have about 85 years, okay? Actually, it's not right. If you're a male, you have 78 years, and if you're a female, you're about 85 years. So anyway, the average is around 80, 81 years. Actually, another very important point for me, why I moved from Hamburg, Germany, to Sitges or Barcelona, Spain, is Germany is only 77 years, and here it's 78, so I gained a year. Anyway, why I tell you this number, 700,000, is because for me it made a big impact. First, it hit me strong, and I calculate, shit, next year I'm turning 40, so I'm like, I'm halfway there. But then I said, okay, actually today I have 24 hours. Now I had about 25 minutes with you guys. So everything that I want to do from now on should leave an impact. I should really follow up my dreams. And I think that's my last message. Life is short. Live your dreams. Thank you very much.
Maybe there's some questions. So, any questions from the audience?
I don't know anything else anymore about venture capital, so don't ask me, okay?
No, first of all, welcome to the midlife crisis. It starts with 40, and these ideas are
how long does it take?
Go through a couple of mistresses, and that will help you.
Oh, okay.
No, I'm in Europe, a VC in Europe for the past 15 years. Which is not 100, but 15.
Ventec, right?
Ventec, yeah. Not only with Ventec, but I've heard that kind of approach for many years in different forms. The customer is the entrepreneur, and we have to do value added. So, with all due respect, I tend to have a pretty different view on that. I think at the end of the day, especially in Europe, money is not a commodity, and it is absolutely not a commodity for entrepreneurs, and neither is it for VCs. I mean, you said yourself how difficult it was to raise money, so we know that, and it has never been more difficult than today, I would say. So things haven't become better. Our customer is, and sorry, entrepreneurs, our customer are the LPs. I'm completely convinced about that. We have to deliver a product which is called a return rate. Otherwise, they're not going to give us money, and the whole thing is going to stop. And the product that we deliver are, at the end of the day, great companies, and we don't deliver them alone, obviously. There's a big impact that the entrepreneurs have, and we shall probably do a lot to make that happen, and then we can discuss all the details. But I'm not convinced, quite honestly. I think, now, whether you do that through accelerators and stuff, that these are all great ideas. I also tend to, by the way, on this subject, I tend to believe that at the end of the day, great companies have always been built by great entrepreneurs. There wasn't too much you could help them with doing that. The guys you have to kind of coach and teach to become great entrepreneurs. Probably it's not that time that they will make the big impact. It's probably the third company or so that will be a good one. So. Anyway, very interesting.
I didn't get the first part of the question, actually. No, just kidding.
It's just a comment, but I think it's a controversy that we could have. But I strongly believe we have to deliver a product to our LPs. That's my main comment.
Perfect.
Don't get it wrong, because otherwise you put the wrong idea into the heads of the entrepreneurs.
Well, thank you. No, that I think is the best answer. No.
Any more? How about a question? Yeah.
I actually like also comments, because I think this is part of the whole idea, no, to spark the
I
discussion.
disagree with that. First of all, I'm an early stage investor, so we're different. You're later stage, and I'm early stage. I'm from the U.S. and you're from Europe, so there's some major differences. Clearly, in the broad sense, the LPs may be our customer, but since we're in our 11th fund, we've had to return capital and make money for them since Fund 1. So, it's nice to have a record like that, but we're only as good as our last deal and our last fund. And it doesn't matter what happened in the first 10. What they're worried about is 11. Now we have 2 active funds, Bay 10 and Bay 11, and the good news is they're doing well. But I don't feel they're my customer. I'm going to give them returns based on these great investments we make, and our job is to make the investments good. And we work with the entrepreneurs closely to make them better and work with them all the time. Otherwise, they're not going to get better. But the LPs, I would never say they're a necessary evil, but at the end of the day, they really are.
I want to have a beer with you later, if that's fine.
Back here.
With you as well, actually. Okay. No. Go.
Thank you, Christopher. I wonder if you could share with us what is the business model of these VCs who have functional teams, meaning head of HR for the portfolio companies, shared CFO. I mean, are they charged at cost? Are they charged with margins? Is it part of the management fees? What is the business model of all these functional teams within VCs?
Well, I think the business model is the same. I think the better question is, how do they finance that? I think in the case of Andreessen Horowitz, it's quite easy. I think the last fund was, you can again correct me if I'm wrong, I think it's $1.4 billion, no, Andreessen? Yeah, or maybe 2 billion. So I think for them, kind of having a 45-man team financed by themselves is because of the size. But the question to you, whether this is paid by the entrepreneur or by the fund, it's definitely the fund that gives this service element to them, right? I think there are hybrid models. There are also the model that you could have an expert league, that provides services, but the entrepreneur opts in or out whether he wants the services and wants to pay for it or not. So, but in these cases, yes, they pay for it. Okay.
Another.
One.
Typically, the fund's structure, there's a management fee, and it just say it's 2% or 2.5% of the committed capital, and that money is spent as the GPs see fit. If they want to have 45-man team to help these companies, that's great. I applaud that. What it means at the end of the day is that they don't take such big salaries. That's a very good thing. Otherwise, if they didn't have that 45-man team, they'd divide up all these fees by 8 or 10 partners, which is stupid, because you want to make it on the carried interest, not on your salary. So having a big staff to help entrepreneurs is a great idea. We have several. It's important, really important.
Yeah, but then don't forget that the average European VC Yeah, this is. I mean, I think that's another message. VC in Europe is a totally different thing than a VC in the States, and probably different thing in Asia or so. It's a local business, and the average European VC's got, in terms of fee producing funds under management, 200 million. That's a good-sized European VC. That's probably 2 funds in parallel that produce management fees. 2%, 2.5%, something like that. You do the math. There's no way to have 3, 4 extra guys doing biz dev for the companies. Yeah. But I mean, it's different. If you could, that would be great, probably. But we don't have the means. I don't know anybody. Yeah.
So perfect. I think that's question-wise, that was it. I think next time we'll have a roundtable on discussing the future of venture capital.
But
thank you guys.
You've only got 350,000 hours left, so I don't know where we find the time.
Thank
right.